Good morning and welcome to Markets Cafe with me Ankur Mishra and Kanishka Sarkar. In next 1 hour, we'll bring you all the details that matters to you before opening of market, be it news, be it stocks to watch, we'll all get in next 1 hour. But before we start, Kanishka, good morning. How were the US markets according to you? They did give some salute to the US-China deal.
Well, absolutely, Ankur. First of all, a very good morning. Fairly positive moves coming in as far as the Wall Street is concerned. The S&P 500 actually rose overnight, clawing back into positive territory for the year as investors extended sharp gains seen in the previous session due to easing US-China trade tensions. The broad index gained about 0.72% to close at 5,886, while the Nasdaq Composite climbed 1.5% to top 19,010. The Dow Jones Industrial Average, on the other hand, lagged, losing about 270 points or 0.5%, as nearly 18% drop in shares of United Health pressured the benchmark. Meanwhile, shares of Nvidia advanced about 6% on the news that the company would send 18,000 of its top artificial intelligence chips to Saudi Arabia. Now, peer chip stocks rose alongside the AI darling, with Broadcom rising nearly 5% and AMD adding about 4%. Now, Tuesday's gains put the S&P 500 up about 0.1% for 2025. Now, adding to these gains was also softer than expected inflation data released earlier in the day. The Consumer Price Index, a broad measure of goods and services costs across the U.S. economy, increased 2.3% year-on-year in April. So overall, a fairly positive handover coming in from the Wall Street. But what is it that you're picking on the crude front?
Also did rose more than 2%. In fact, the easing tensions between US and China and also regarding the trade deal did push crude higher. If you look at the levels, it was rising. It climbed up more than $1.6 per barrel and ended at $66.63. But more than that, even the inflation data was quite positive for crude, and therefore you see those levels of 66.63 as far as crude is concerned.
Absolutely. Strong moves on oil. Now, moving on, let's also take a look at some of the cues to watch out for later in the day. Now, back home, the WPI index is going to be released today, whereas in Japan, the PPI data is going to be released later in the day. Now, in terms of global earnings, we have Tencent and Sony, which will release their March quarter numbers. Now, apart from that, back home, in terms of nifty earnings, Q4 earnings that is, Eicher Motors is one of the major players that's going to release its Q4 numbers. Apart from that, in other events, B.R. Gavai is to take charge as the Chief Justice of India. NATO is to hold informal ministers meeting in Turkey. On the other hand, in the US, Fed Governor Christopher Waller is to speak, whereas San Francisco Fed President Mary Daly is also due to speak later in the day.
Yes, Trump also said that he will be removing all sanctions against Syria. He said, and I quote, "In Syria, which has seen so much misery and death, there is a new government that will hopefully succeed in stabilizing country and keeping peace." That's what we want to see. Reacting to the announcement, the Syrian Foreign Minister Assad al-Shaibani said he appreciates Trump's decision in calling a new start to Syria reconstruction efforts. In a post on X, the foreign minister also expressed gratitude to Saudi Arabia for its role in facilitating the move, saying it marked the opening of a new chapter for the Syrian people.
We have none stronger and nobody like the gentleman that's right before me. He's your greatest representative. And if I didn't like him, I'd get out of here so fast. You know that, don't you? He knows me well. I do. I like him a lot. I like him too much. That's why we give so much, you know? Too much. I like you too much. Great guy. They lifted sanctions on Iran in exchange for getting nothing. We've cut our health care by 50 to 90%. You're going to see drugs and pharmaceuticals come down at numbers that nobody has ever seen. And drugs, pharmaceuticals, we think will be dropping and it'll be a redistribution of costs with other nations, which really took advantage of a very nice group of people that ran our country.
All right, then moving on, Trump also said that he'll be removing all sanctions against Syria. He said, and I quote, "In Syria, which has seen so much misery and death, there is a new government and will hopefully succeed in stabilizing the country and keeping peace. That's what we want to see." Now, reacting to the announcement, the Syrian foreign minister has appreciated Trump's decision, calling it a new start to Syria's reconstruction efforts. In fact, in a post on X, the foreign minister also expressed gratitude to Saudi Arabia for its role in facilitating the move, saying it marked the opening of a new chapter for the Syrian people.
On to some macro headlines this morning. Inflation in the United States for the month of April edged lower than expected, and CPI for the month rose to 0.2%, putting the 12-month inflation rate at 2.3%. It's lowest since February 2021, if you call this rate, and the monthly reading was in line with expectations, while annualized print came in below estimates of 2.4%. Excluding volatile food and energy prices, the core CPI also increased 0.2% for the month. While the year-over-year level was 2.8%, the forecast was 0.3% and 2.8% respectively.
After US, India's inflation curve also just took a welcome dip. Now, retail inflation cooled to 3.16% in April, slipping below the expectations and marking its lowest level since July 2019. Now, what's behind the mellow mood? A sharp softening in food prices, with food inflation easing to just 1.78%. Meanwhile, core inflation held steady at 4.1%, keeping the RBI's rate cut hopes quietly simmering. Now, we also dialed in to two of the sharpest minds on the street, Saugata Bhattacharya and Sakshi Gupta, to break down what April's cool inflation print really means, from what the RBI could do next to how global trade tremors might shake up India's growth story. Now, they connect the dots and set the context. Let's listen in.
The food side, there seems to be a broad-based moderation, which is not concentrated just, in things like vegetables and fruits, but also, cereals and pulses, which tend to be a little bit more stickier. There, we are also seeing a moderation in inflation. I think with the expectation that, monsoons are going to be, normal or above normal this year, and you're coming on the back of good food supply from healthy outputs from FY25. I think the outlook on inflation definitely has turned much more favorable now. We are tracking inflation to be, close to this 3.2% print over the next 2 months as well. On the global front, again, both food and non-food, prices have broadly either been inching down or have remained stable. So that's another positive for the outlook on inflation. I think this print does set the stage for continuous monetary accommodation from the Reserve Bank of India going forward.
Both inflation balance is definitely tinted against inflation, more towards supporting growth. I think there is a slowdown, although the high frequency indicators still suggest that we are likely to grow anywhere even in FY26, upwards of 6.2, which is where my current forecast is picked at. But that also depends on how the global environment, trade in particular, plays out. But as of this point in time, between the growth and inflation, the two competing targets, I think the focus should probably now be more on supporting growth than on the need for controlling inflation. I think inflation will remain relatively moderate. Even if it goes above 4%, it will not be very significant crossover of the 4% target. And over a long period of time, I think we can expect that inflation will, depending on everything else, ceteris paribus, as they say, given everything else, that inflation will probably be close to the target, which is the MPC's the primary objective and goal.
Microsoft is laying off 3% of its workforce across level and geographies, with a total headcount of 228,000 as of June. The move will affect several thousand employees, roughly over 6,800, marking the company's largest workforce reduction since it cut 10,000 roles in 2023. Reports suggest that layoffs are not performance-based. The announcement comes amid a renewed wave of job cuts across tech industry. Remember, just last week, cybersecurity firm CrowdStrike announced a 5% reduction in staff.
Japan's SoftBank Group posted a net profit in the January to March quarter, bouncing back after a loss in the previous quarter. Now, this profit was largely driven by gains from investments in global tech giants like Alibaba, T-Mobile and Deutsche Telekom. Now, Ansh is joining us with all the details on that front.
SoftBank has reported sharp turnaround in its financials this fiscal year. Company posted a net income of 1,153 billion, reversing a loss from its previous year. Now, this was mainly driven by a massive 3,701 billion investment gain compared to a loss of last year. A large part of this came from its holding business with 3,413 billion gain, including profit of around 1,875 billion on Alibaba, whereas 1,352 billion on T-Mobile, 434 billion on Deutsche Telekom. However, these were partly offset by 2018 billion in derivative losses linked to those holdings. The Vision funds also contributed, posting a 387 billion gain by rising valuation of its company like ByteDance and Coupang. Whereas SoftBank is now gearing up for its next big AI step. It has announced a Stargate project and committed up to around $40 billion in follow-on investment to OpenAI Global, with an effective investment of around $30 billion after the syndication.
For those details. With this, let's move on to an important story after India-Pakistan tension, which is now spilling over travel choices. Some Indian tour operators have suspended bookings to Turkey and Azerbaijan, countries that openly backed Pakistan. Nivedna Prabhu joins in with more details.
In the view of the ongoing diplomatic tensions between India and Pakistan, the travel and tourism industry has taken a strong stance in that particular purview. Now, let's tell you, with the aspect of tourism, Azerbaijan and Turkey have been pretty popular destinations in the past couple of years. Now, having said that, we're looking at popular travel tour operators, whether it's Ixigo, Cox and Kings, as well as Ease My Trip, now suspend their bookings to these regions. Why would that be? Well, Turkey and Azerbaijan have openly supported Pakistan while the escalating tensions between India and Pakistan was witnessed, and we continue to look at an evolving situation. But it's also important, given the aspect that the numbers that we're looking at, because Indians, in fact, visited Turkey alone in 2024. Those numbers were 2.87 lakh. And when we're talking about Azerbaijan, 2.43 lakh Indians visited the region. And essentially because, given the aspect that Turkey saw record 6.22 crore international tourists in 2024, that was up by 9% when compared to 2023. So essentially you're looking at how this has overall also impacted or will impact their economy, because when we're talking about tourism, beg your pardon, we're looking at how 12% of GDP in Turkey comes from tourism. When we're talking about Azerbaijan, it's about 7.6%, and ultimately, of course, jobs also come through this particular route. So with these popular tour operators taking that step is one aspect. The other is, will fellow competitors also take that particular step? Will we look at more strong stances coming from that industry? Well, that remains to be seen.
Thank you, Nivedana, for getting us that latest as far as the travel sector is concerned in light of the India-Pak tensions. But we also caught up with Veena Sikri, who's the former High Commissioner to Bangladesh, to decode this move. Let's go across and listen in.
In Turkey to put out, advisory saying, please come, and the people don't know. But we do know that President Erdogan is one of the biggest supporters of the Pakistan regime. And we do know that immediately after the terrorist attack on the innocent tourists in Pahalgam, when Pakistan realized that there's going to be a strong response from India, Turkey sent 6 plane loads of drones, and all these drones that have been coming across in swarms from Pakistan. And of course, our air defense has been able to bring down almost all of them. But we do know that President Erdogan immediately stepped in and sent these 6 plane loads of defense equipment. Later on, they tried to brush it off. No, this was nothing. It was only a refueling halt and stuff like that. But we know that was all wrong. And we do know that there were definitely 6 plane loads of highly state-of-the-art drones and other equipment sent by Turkey to help.
After point-by-point rebuttal by New Delhi to claims about United States brokering the ceasefire between India and Pakistan last week, US President Donald Trump has once again said that India, Pakistan are actually getting along and take credit of it. Let's listen in what he had to say.
Both have very powerful leaders, very strong leaders, good leaders, smart leaders, and it all stopped. Hopefully it'll remain that way, but it all stopped. I was very proud of Marco Rubio and all of the people that worked so hard. Marco, stand up. What a great job you did on that. Thank you, J.D. Vance, Marco. The whole group worked with you, but it was a great job. And I think they're actually getting along. Maybe we can even get them together a little bit, Marco, where they go out and have a nice dinner together. Wouldn't that be nice? But we've come a long way, and it's could be, you know, millions of people could have died from that conflict that started off small and was getting bigger and bigger and bigger by the day.
All right, that's the latest word coming in from US President Donald Trump as far as the US-India-Pak tensions are concerned. But with that, it's time to take a very short breather on this edition of Market Cafes. Don't go anywhere. We'll be right back.
Welcome back. You're watching Market Cafe with me, Ankur Mishra and Kanishka Sarkar. But let's take a look at Asian markets, how they are faring. It looks like mixed signals coming in, with Hang Seng is up for more than 1% after positive cues which came in from US markets. Remember, after US-China deal was announced, there was a positive close in US markets and positive cues taken by Hang Seng as well as other Asian market. But if you look at Shanghai, it's trading flat to negative now. Earlier, the indices was in positive territory. If you talk about Kospi, it is also up around 0.5%. You can see it on your screen. Apart from that, Nikkei is trading 0.5% down this morning. So mixed cues are coming in from Asian market per se. But if you talk about the implied open of GIFT Nifty, that is 0.5% higher, 84 points up on your screen. So after yesterday's fall, it seems like positive cues coming in from GIFT Nifty as well as some of the Asian markets. Kanishka?
Absolutely, likely headed for a start in the green this morning. But now moving on to an exclusive, the finance minister will hold a review meeting with all the heads of PSU banks tomorrow, that is May 15th. My colleague Prakash is here on the phone line to tell us what exactly is on the agenda.
Yes, that's going to be a very important meeting. That will be annual meeting, which is going to be chaired by the finance minister. All the heads of the PSU banks, along with the DFS secretary, some senior officials of the finance ministry will attend the meeting. The finance minister will review the financial performance of the public sector banks, primarily for the financial year 2025. Various parameters have already been decided, and based on that, the financial performance of the banks will be reviewed. Along with that, one important thing which is very crucial at this point of juncture is deposit mobilization. You know, in last several meetings, the finance minister had urged PSU banks to take several steps to improve deposit mobilization, which is declining. And therefore, this meeting is going to be very crucial, as the banks will inform the finance minister of what are those measures they have taken and what is the progress they have seen so far. So that's going to be very crucial. Along with that, some other important issues like credit growth to sunrise sectors, steps they have taken to improve digital infrastructure, cybersecurity measures. These are some other crucial issues which will be discussed. This meeting is going to be going to happen in the backdrop of several cyber attacks happening on the financial infrastructure. I remember the finance minister had a meeting with these banks and other financial institutions a few days back, and now this meeting is going to be held tomorrow itself. That will be the major thing, and the focus thing will be the focus will be provided on the financial performance of the banks. That's going to be annual meeting. Therefore, it's a very crucial meeting. Finance Minister herself will chair this meeting. All the heads of the public sector banks will present. Of course, we'll keep an eye and update what the important steps are going to be taken. Back to you.
For those details, in fact, we will keep an eye on this important meeting tomorrow and will also report the outcome. But moving on, telecom major Bharti Airtel has come out with steady set of Q4 earnings. However, it has posted a drop in net profit. Revenue margins and EBITDA all held steady in line with what was street's pricing in. Ansh Bhilwar is here with more details on the number crunching.
Bharti Airtel has reported steady performance for fourth quarter. If we talk about revenue, then that came in at 47,876 crore, registering 6.1% sequential growth in line with our estimates. On profitability front, we are seeing that net profit stood at 11,022 crore, which is down by around 25.4% on quarter-on-quarter basis, but still ahead of street expectation. And this also included deferred tax of around 4,230 crore. Talking about EBITDA, that rose by around 10% to 27,009 crore, while margins improved by around 191 basis point to 56.4%, which is also broadly in line with our estimates. Company's ARPU remained flat at 245 rupees, indicating a stable revenue per user metric, whereas capex during the quarter surged to 14,401 crore as compared to just 9,161 crore in the previous quarter, as the company continues investing in network expansion and 5G rollout. India's mobile segment revenue stood at 26,616 crore, slightly higher than its previous quarter. So overall revenue margin were in line, but that surprised on upside, and company continues to strengthen its capex cycle.
Thank you, Ansh, for getting us that review of Airtel earnings. But moving on, let's shift focus to the auto space then. It's been a smooth ride to the finish line for Tata Motors this quarter. Well, the top line cruised in as expected. It's the bottom line that floored the pedal. Now, profit zoomed past street estimates to over 8,400 crore rupees, marking a solid year-on-year leap. Now, a resilient quarter powered by strong JLR tailwinds and domestic stability. Now, buckle up now as Srishti joins us to break down all the numbers.
The numbers look very good coming in from Tata Motors this time around, and especially look at the margins, because on a consolidated basis, the margins are on the positive side. But apart from the numbers, the big commentary and the big headline is that the company has now turned into the net auto cash positive in FY25. The company has delivered and achieved the target that they have given earlier. And for now, the net cash balance stands at over 1,000 crores is what the company is highlighting. On to the number front, well, of course, though the revenue has come in line to what we were expecting, but a consolidated margin surprise is what we have witnessed. 13.9% is the consolidated margins, and even the profit figure has come in above to what we were expecting at 8,470 crores. Now, when we come to the segmental performance, the JLR EBIT margin has come in line at 10.7%. The passenger vehicle margins are a little better than what we were expecting at 7.9%, while the commercial vehicle margins stands at 12.2%. But specifically, let's look at the commentary, especially from the JLR front, because that's where the action has been happening with respect to US and UK, specifically these particular markets. The company does say that the tariff and the related geopolitical actions are making the operational environment uncertain and challenging, though the company does welcome the deal that has been announced between the two nations. But the global premium luxury segment and the Indian domestic markets are expected to weather this relatively better, is what the commentary is on that front. When it comes to the commercial vehicle business, then they anticipate a sustained growth despite the global headwind, while for the passenger vehicle outlook, and the outlook does remain on the positive side, but the EV business was a bit positive at 6.5%. And also on the JLR outlook, the company does continue to evaluate the impact of the global challenges and will provide an update at the Investor Day on 16th of June 2025. As of now, the planned investment for the next 5 years stands as it is. So all in all, good set of numbers coming in from Tata Motors and also the management commentary.
Srishti for that detail, and as Srishti was pointing in about the management commentary, let's tune into what the top brass at Tata Motors has to say on Q4 turbocharged earnings and just how much Trump's tariff tantrums have rattled the company's sales engine, and also on the flip side, the likely impact of US-UK trade deal.
Firstly, we welcome the India-UK FTA as well as the US-UK tariff change that has been announced by the President and the Prime Minister in the UK. First take the US versus UK tariffs that were brought down to 10%. We await the fine print in terms of timings. When does it change from when? We also need a few clarifications in terms of what does it do to parts and accessories. But directionally, it's in the right track. Obviously, situation is much better than what we were facing before. But I think we will need to wait for a few days before the final clarifications are issued in terms of notifications and the changes that are there, whether it's applicable retrospectively or not. So those are the things that we await. As far as India-UK FTA is concerned, I think that's again a great development and it augurs well for JLR. At the same time, we also await when the FTA actually comes into force, but we believe this is going to benefit the future cars that are going to come, which means customers will be able to access these global cars at global prices much faster because of this FTA, and therefore it augurs very well for continuing to drive JLR's performance in India. Defender into US is concerned, definitely it has been impacted by the tariffs there, and since it's manufactured out of Europe, it's at a 25% tariff rate even today, and therefore we will treat it as a full portfolio and find ways to see how we can offset the tariff increases that are there. At the same time, we remain optimistic that there will be a deal done between EU and US as well, just like what has happened between UK and US, but we'll have to wait for that to happen. We are hopeful that that will happen sooner rather than later. At the same time, overall, we will have to still need to be focused on delivering growth, focused on delivering our cost initiatives so that we can manage the impact of the tariffs better.
All right, then that's the latest word coming in from Tata Motors management. But let's keep it with the earnings space. In fact, Siemens also reported its numbers for the March quarter. And, if you look at the number on a year-on-year basis, it's fairly a weak quarter. On a year-on-year basis, Siemens revenue stands at 3,808 crore rupees, which is an increase of about 2.5% year-on-year. However, profit has dropped almost 25%, coming in at 674 crore rupees. EBITDA also saw a decline of 23.7% year-on-year, falling to 789 crore rupees, with a corresponding drop in EBITDA margin to 20.7%. Now, if you look at the performance on a sequential basis, Siemens recorded 20% increase in revenue. Profit also almost rose by 20%, while EBITDA increased by 8.8%. However, EBITDA margin, as I mentioned earlier, decreased slightly to 20.7% from 22.8% in the previous quarter. Now, according to the company, it had a flat revenue due to normalization of demand in digital industries and regular project delivery in the mobility business. Profit decline was attributed to under-absorption of fixed costs and higher material costs in digital industries business. Now, looking ahead in the calendar year 2025, Siemens expects an uptick in demand for automation and digitalization solutions as private capex improves.
Right. Let's move on to gold because there has been no surprises as far as gold is concerned. There is a report by NSE's Market Pulse which has crowned the yellow metal as FY25's best performing asset so far, shining brighter than stocks, bonds or crypto dreams. With the demand hitting 15-year high, investors clearly aren't done stashing their faith and funds in bullion. Anjali Palod, my colleague, is joining in with more details. Anjali?
The National Stock Exchange, in its monthly market pulse for the month of April, has identified gold as the best performing asset for the financial year 25. According to the data in this market pulse, the prices for gold rose 41% in USD terms and 33% in rupee terms in 2024. In fact, gold closed at 94,000 per 10 grams, which is a testament to the rally that gold prices have been seeing in the past multiple months. Gold demand reached 4,974 tons in 2024 according to NSE, which is the highest level that it has ever reached in the past 15 years. In fact, gold now comprises over 11% of India's forex reserves as well. Now, this demand for gold is being driven by the heightened global uncertainty and therefore the need for investors to diversify beyond equity and debt. And in such times, gold, which is seen as a safe haven for investments, has been the major pick. However, on the flip side, these rising prices of gold have also led to a decline in the purchases of gold that Indians usually do for different purposes, including weddings as well as auspicious occasions. Now, what we saw during Akshaya Tritiya as well as the wedding season was a slowdown in the gold jewelry buying. However, people did go for lower priced or lower grammage of jewelry. But what NSE has called out in its monthly market pulse for the month of April 2025 is that if you had bought gold in 2023, it would have been the best performing asset at the close of FY25.
Thank you, Anjali, for getting that latest on gold, which keeps shining brighter. But let's shift focus. Now, India's gas giant is turning up the heat. GAIL CMD Sandeep Gupta tells ET now that all three of its petrochemical projects are on track to go live within this fiscal, marking a big push on the capex pedal. Now, in an exclusive chat with Prakash Priyadarshi, Gupta also signals that GAIL's appetite for expansion, saying the company is open to snapping up CGD assets from other players. Let's go across and listen into that conversation.
Also getting commissioned this year, and the balance section of Urja Ganga pipeline, which is Dhamra Haldia and Durgapur Haldia pipeline, of which only Kolkata Haldia was pending, will also get commissioned by the end of this year. So we will be completing large sections of pipelines in this year, and only the pending pipeline will be Gurdaspur Jammu, which was lately authorized to us and which is slated to be completed by mid-26. Besides that, we are also slated to commission our three petrochemical projects which are going on. In fact, all three projects which are going on. The first is Pata PP, which is 60 KTA. The second is Usar PP, which is a PDH technology PP, and it is a 500 KTA. And third is 1.25 million ton PTA plant at Mangalore, which we acquired through NCLT process. All three projects are slated to be commissioned in this financial year itself.
Are you also planning to acquire CGD assets from some other companies? CGD assets?
No. So in today's board meeting, we have decided first that 6 geographical areas which are with GAIL will be transferred to GAIL Gas, which is our 100% subsidiary, so that our CGD business is consolidated under one umbrella. And besides that, we are also in discussion with many JV partners of consolidating various JVs. So the work in that direction is progressing, and given the opportune time, if there any CGD asset is available, we will be more than happy to acquire that. In fact, our subsidiary, our joint venture company, Mahanagar Gas Limited, has already acquired 3 GAs of another company.
Plan to launch InVate for some pipelines?
No, we do not have any such plan to do any InVate kind of things. But we definitely keep on identifying any asset which is underperforming, and we have one asset in US, a shale gas asset, where we decided that we should sell it off. So unfortunately, because of the drop in the prices of oil, that could not go through. But definitely we keep on looking for such opportunities where our underperforming assets can be high.
For that exclusive conversation with GAIL management, with this, it's time to take a quick break. But don't go away. We'll bring you news about MSCI changes after the break. Welcome back after the break. You're watching Markets Cafe. Now, important check on Asia. You can see Hang Seng still continues to trade around 1.5% higher, followed by Kospi, which is 0.5% higher. But more important cues coming in from China, which is actually now turned flat, which was trading in positive territory earlier. And Nifty implied open is giving a positive signal of 89 points, meaning a positive Q coming in as far as GIFT Nifty is concerned. Kanishka?
Yeah, those are the cues that we're tracking for the Asia markets. But let's shift focus to the MSCI index rejig for the month. Now let's go across to Rabinder for what's expected in terms of inflows and stocks set for inclusion and exclusion. Good morning, Rabinder. Okay. But before we get you those updates, let's also first take a look at the stocks to track in today's market. Ashesha is joining in with all those details.
Kanishka, good morning. So first up, let's talk about Mahindra Lifespaces, where the board of directors have approved fundraise to the tune of 1,500 crores. This will be done via rights issue, and the company says that it will be done to lower their debt and also for the future growth and expansion plans of the company. So on account of this fundraising plan of 1,500 crores via rights issue that has been announced by the company, Mahindra Lifespaces will be in focus. Let's also talk about the pharma counter, Aurobindo Pharma, where company's wholly owned subsidiary Curatech Biologics has received an approval for a biosimilar from UK's MHRA. So on the back of this approval that has come in, keep an eye out on Aurobindo Pharma as well. Shifting focus to GAIL then, where GAIL and Government of Karnataka have signed a memorandum of understanding for 1 gigawatt renewable energy project. So big project that has come through for GAIL. Gas Authority of India also in focus on the back of that. Shifting focus to two earnings candidates then. First up, Garden Reach Shipbuilders. It has reported very strong set of numbers, much better than what the street was working with. Revenues have seen an uptick of a solid 62% on a year-on-year basis. Margins have come in at 13.5%. versus 8.9% that the company had reported in the previous quarter. So very strong set of numbers. Garden Reach Shipbuilders in focus. And also ITD Cementation. This one has reported weaker than expected set of numbers. Weaker than what the street was working with rather. Revenues have seen an uptick of 10%, but margins have 10.5%, is weaker than what the street was working with. So weak set of numbers from ITD Cementation, but strong set of numbers that have come in from Garden Reach Shipbuilders this morning.
Ashesha, now steady exports and domestic sales are set to drive Eicher Motors Q4 numbers. Trishti is here to share insights, what the street is penciling in and what should we watch out.
From Eicher Motors this time around, the key to note is the Royal Enfield volumes. A double-digit growth is what we have seen in the Royal Enfield volumes, and exports have definitely outpaced the growth that we have seen in the domestic market with a 42% jump up. When we talk about the consolidated numbers, on the revenue front, 5,190 crores is what we are expecting. EBITDA expected at 1,295 crores, but the margins will be the key to watch out for, and 25% is what we are expecting on the margin number for the company. And lastly, on the profit figure, 1,265 crores is what we are penciling in. Yes, of course, the Royal Enfield volumes have been quite supportive, and Royal Enfield margins this time, rather the standalone margins, are expected at 25.5%, while a double-digit growth in the VECV revenue is expected as well. But definitely on the management commentary, all eyes on the demand outlook, the kind of new launches that the company is planning, and is commercial vehicle segment now ready to make a comeback. All these things will be the key monitorables.
Thank you, Srishti, for getting us that review as far as Eicher numbers are concerned. But time now for some interesting market opinion from the house of Kotak from none other than Nilesh Shah. His take on earnings and the outlook going forward. Let's go across and listen in.
This quarter, we should be having Nifty 50 EPS of anywhere between 260 rupees to 275 rupees. That should take us somewhere around 1,050 Nifty EPS for FY25. This year, FY26, we could be somewhere around 1150, 1160 Nifty 50 EPS. And year after that, we should be crossing somewhere around 1300. So the earning trajectory looks quite reasonably solid. Now, there are sectors which are doing well. There are sectors which are not doing well. But overall earnings trajectory looks on the positive side. Undoubtedly, we have areas to cover, for example, private sector investment. But consumption, which was a little bit on the soft side, subdued side in the urban India, is likely to get supported. So overall, my feeling is that both from an earnings point of view as well as flow point of view, India is well supported. Our valuation to a great extent discount that growth, and hence the returns will be moderate.
ICICI Bank, HDFC Bank, BEL, these are some of the top holdings of Kotak. FIs are back, DIs are buying, HNIs are feeling left out. Retail is saying we should not cancel our SIPs. So market में seller ही नहीं है अब तो.
So the selling will have to come, Nikunj bhai, from the IPOs and OFS and QIPs. There is a large lot of promoter lock-in which is getting expired or which will become free. So my feeling is that at a price, sellers will emerge. At a price, buyers will emerge. And that's how market functions. Undoubtedly, flow point of view, institutional and retail investors are likely to be buyers. And hence, supply will essentially come from the primary or secondary issuances from the promoter stable.
All right. Hi, Nilesh. Good morning. This is Shrishti also joining in. But what do you make of the FII comeback? Do you believe that now is the time then FIIs are making a strong comeback and they are here to stay? Because of late, while the markets were a little choppy and volatile, the FIIs did turn positive in the month gone by, and in this month itself, the majority of their action is on the buying side indeed.
So we saw in the month of March passive funds turning buyers. April was largely passive funds continuing to buy. There was one particular day when 11,000 crore worth of FPI buying came. That was primarily driven by passive flows. Active funds started buying in May, and despite this geopolitical risk, they continued to buy. So my feeling is that FPIs will be buyer of Indian equity. Of course, they are here to make money, so they will look at valuation. They will look at potential return trajectory. But my feeling is that ultimately, subah ka bhula, sham ko ghar laut aayega.
Also, we are tracking important news of MSCI changes which has been announced this morning. You can see that among the key changes, 2 Indian stocks, Coromandel International and Nykaa, have been added to MSCI Global Standard Index. These additions are projected to attract passive flows of around 252 million and 199 million. That's what estimates are there. And Kanishka, I feel the inclusion of these firms reflect strong investor interest in India's consumption and agri-linked stories.
Well, absolutely, Ankur. But with that, we're completely timed out on this edition of Market Cafe. But stay tuned to ET Now as the market takes all the action forward with more news and updates coming up on the other side.
If you like this video, then like, share and subscribe to ET Now.